Good day, subscribers! Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing Is It a Buy, just like we do every single week, and we're doing it on Shake Shack stock today. Shake Shack is the one we are doing, and we're trying to find out if Shake Shack stock is as tasty as its burgers. This stock was suggested by the MPAM, and the MPAM, you have suggested the stock like 47 times, and you finally got picked out of the hat, so congratulations on being the one selected today. Now, guys, go ahead and leave me a comment on what stock you would love to see broken down in next week's video, so you have a chance to go ahead and see me break down that stock. Now, Shake Shack. We're going to do like we always do and act like Shake Shack, we don't know what it is. What is Shake Shack? Shake Shack is a modern-day roadside burger stand serving a classic American menu of premium burgers, hot dogs, crispy chicken, frozen custard, crinkle-cut fries, shakes, beer, wine, and more. It was founded by Danny Meyer in New York City back in 2001. It started as a hot dog cart. It grew into a place in Central Park and then went from there, basically. So Shake Shack simply is a burger place that's a fast casual type dining experience, similar to maybe a Chipotle or something like that. So they are kind of in that bracket of $6 to $10 for most items on the menu. Now, Shake Shack has an experience of very, very nice places they build. For just a burger chain, they build very, very nice places. They're decorated nice and all those kinds of things. So let's dig into this stock a little more now that we know what it is. So something I was looking at, by the way, everything we're looking at currently is on their 10K, and it's in the annual report in the investor relations page on Shake Shack. So just so you guys know. So something I highlighted here is where they're talking about leaders training future leaders. We invest in our team through extensive leadership development programs to ensure that Shake Shack remains a great place to work and a real career choice for team members at every level. We built a culture of active learning and foster an environment of leadership development through the entire life cycle of employment. Now, why did I highlight that, and why is it important, in my opinion, to look at when judging a stock like Shake Shack? Well, Shake Shack's the first, I guess you could say, fast food or fast casual food related stock we've broken down in this video. And what I've learned, because I've worked in food industry, I worked for convenience store industry, I worked in a lot of different things that have to do with retail, and I can tell you that one of the most important things in retail or food is actually the employees. The employees are so vital because they are the ones that the customers come in contact with. And a lot of times if those employees are not very happy and outgoing and things like that, they will push customers away. I've seen it time and time again, and generally those places aren't as busy. And generally the employees just have more of a negative attitude. You know, what can I do for you? And then if you have a problem, they're like, oh, look at you like it's the end of the world or something. So the fact that Shake Shack is focusing on employees and keeping employees happy and going up a career ladder and seeing the opportunities that will present themselves to those employees, this is big in my opinion. This is so big nowadays. It's huge. You do not want an employee force in a customer service related field that's just negative. So this, I believe, helps out, and this is a very good thing for Shake Shack. Now, this doesn't have anything to do with the stock, but I had to highlight this. Listen to this burger, the Surf and Shack, offered exclusively at Boston and Connecticut Shacks during August and September. The Surf and Shack is 100% all-natural Angus hamburger topped with Maine lobster, lettuce, tomato, and Shake Shack sauce. I'm like, oh my gosh, that sounds freaking fabulous. I was like reading that and I'm like, if I'm ever in Boston or Connecticut, I'm freaking getting that burger, man. Especially if it's in August and September, I'm getting that burger. Okay, so let's go back to the stock here. So now we're talking about growth strategies. Shake Shack has grown considerably the last couple years, and they plan to do in the future. So opening new domestic company-operated shacks. This is where our greatest immediate opportunity for growth lies. We've waited nearly 5 years to open our second shack, and we are still in the very nascent stage of our story, with only 44 domestic company-owned and 5 domestic licensed shacks in 12 states. as of December 30th, 2015. We believe there's a tremendous white space of opportunity to expand both in the existing and new U.S. market, and we have invested in infrastructure that will enable us to continue to grow rapidly with discipline. So Shake Shack is in a major growth phase right now. They have hardly any restaurants. They can probably fit 500 to 1,000 Shake Shacks in America alone. That's not internationally, just America. And the fact that they only have, 50 or so now, that leaves a ton of opportunity to grow revenue, grow profits, do all those type of things over time in the United States alone. And then internationally, obviously, there's a huge opportunity internationally as well. So we're definitely looking at a company that will be growing a lot over the next decade. Next up, now we're going and we're looking at the risk factors section of that annual report. I always look at the risk factors. It's very key to, and the risk factor we highlighted here is incidents involving food and safety and foodborne illness can adversely affect guests' perception of the brand, result in lower sales, and increase in operating costs. So the reason I highlight this is so important to look at anytime you're looking at a restaurant or food-related stock. Because I've seen stocks and companies get killed over an E. coli situation or something like that where, it gets a ton of media attention and it just hurts the brand forever and that brand can never get back. Now, a high flyer stock that this happened to last year was actually Chipotle. Chipotle's stock price was like profits, revenue. They were just growing monster. And then what happened? They had the whole E. coli situation and other things like, employees were coming to work sick and things like that. And Chipotle just could not get out of their own way as far as the negative news media coming toward them and just making the brand look bad. Now, I think Chipotle did the best job they could possibly do under those circumstances in saving the company. I've seen the results from Chipotle the last quarter or two, and I'm amazed that they've been able to steady the ship the way they have. Because a lot of companies with a situation like that, they're done. They're done. And the way that Chipotle's, kind of righted the ship, it's very impressive. But the fact is, Chipotle's brand did get damaged very heavily, and they may never be the same as far as their brand goes. So this is something to pay attention to with Shake Shack or any stock in the restaurant industry. Know that risk can come out of nowhere and knock you silly, because it can. Next up, we're going ahead and looking at, we're still under the risk factors section. We face significant competition for our guests, and if unable to compete effectively, our business could be adversely affected. Why I highlighted this? Of course, every business is in a competitive field if you're a public company. There's no easy, we have no competition type situation. But with Shake Shack's business model, they have so much competition. They have tons of competition from the lower end. They have, competition like McDonald's and Burger King and Wendy's and all those places on the way, way low end, which Shake Shack really doesn't compete with those guys. What Shake Shack competes with is companies like In-N-Out Burger, if you're familiar with them on the West Coast. In-N-Out Burger, they serve always fresh burgers and they're just fabulous. They're always great, amazing quality. The company is probably one of the best run food companies probably in the world. And they compete still at a much lower price point than Shake Shack. Shake Shack burgers are usually $8-9, whereas In-N-Out burgers are usually around $3 to $4. So I think that's a major competitor for them. You have places like Five Guys, another major competitor. And you have a lot of other littler burger joints like Smash Burger and places like that have been expanding over the last decade and have really grown their businesses through a franchise model. So there's a lot of competition in that premium burger market, those specialty type burger places. You can say, they also serve chicken and hot dogs and things like that. Well, yeah, in the chicken category, there's a ton of competition, and Shake Shack is known as a burger company. They're known as a burger company and a milkshake company. That's what they're known for. That's where they get most of their business from. So unless that changes, that's what their brand will always be known as. So you got to understand that they're in a very competitive space. One of the most competitive that I could see out there. So I love their business, but I don't in the fact that they have so much competition. So much competition. Let's go ahead and dig into these financials now. Basically, where I'm at with their business is I like it, I don't love it. So income statement, they grew from $118 million in revenue in 2014 to last year they did $190 million. So great growth there. And we're going to look down at the net income, and they made $2 million in 2014. That's all the way at the very bottom. But last year, they actually lost $8.7 million. That could be because of the huge amount of growth. That could be because of the IPO, and that takes up a lot of funding and costs and all those kinds of things. So I'm not going to ding them too bad for their net income here, but it's definitely a growing company. It's very impressive to see revenue up that amount of money. Now let's look at that balance sheet. So balance sheet, as always, we're focusing on cash, short-term investments, long-term investments, and then focusing on the debt and what's the difference between those two. So they have $70 million in cash, no short-term investments, no long-term investments. They have no short-term / current long-term debt under the liabilities, and they also have no long-term debt. So basically, we have about a $70 million in cash laying around and no debt. So I would rate this a strong balance sheet. That's a strong balance sheet, very impressive. Now, let's look at these latest quarterly results. These are the results that just came out the other day. I believe actually yesterday these results came out. Third quarter total revenue grew 40%. 40% year over year. That's a huge, huge revenue uptick. Shake Shack sales increased 40.2%. Same store sales basically increased 2.9%. So that's impressive, but it's not as good as they have been doing. And all the way at the bottom there, net income attributable to Shake Shack shareholders was $3.8 million or 15 cents per share. So they're not making a ton of money at the end of the day yet, but once again, this is a growth company. They're in a growth state. So we'll see what happens as time goes on over here. Now, they also gave an updated 2016 outlook. Now, what I wanted to focus on was they're raising their total revenue. They're expecting to 264 to 265 versus they had 253 to 256. So that's good. They're raising the revenue, 10 million or so. The outlook, and same store sales 4 to 5%. Now they only grew 2.9% last quarter, so is this a trend that's down ticking? Well, let's go ahead and look at the preliminary 2017 outlook. Now in the preliminary 2017 outlook, you see they're expecting around $350 million in revenue. That's great. That would be about a $100 million increase over last year, which is the current year we're in. But look at same-store sales. They're expecting between 2 and 3%, which includes approximately 1.5% to 2% of menu increases in price. So really, Shake Shack next year is hardly going to grow same-store sales at all. The main way they're only going to get it, or at least they're expecting to get it, is actually from menu price increases. So they're not expecting many more customers to be coming into these Shake Shacks. So this is getting to such a small amount now that I'm like, okay, are same-store sales about to go negative? That would be my worry with Shake Shack when you're starting to get to that low of a rate. I've seen it happen with so many retailers, so many restaurants over time. They get down to this part where it's only like, oh, we're just going to grow a teeny bit. And then next thing you know, it starts going down, especially when they were growing up here, which is where they've been growing the last couple of years. So that, for me, is a little worrisome when looking at their business. Now, let's also go ahead and take a look at all the basic statistics. So we can see Shake Shack had a phenomenal day today after their earnings, up 12%, a market cap of about $1.4 billion, which is a very big market cap for a company that has about 60 stores or so. Or 70 restaurants. I think it's around 70 restaurants right now. A PE of 91, so a very high PE. 52-week range, by the way, of $30 to $47, so it's kind of in the middle there. A forward PE of 67. So, what do you guys think? Am I going to rate Shake Shack a buy or not a buy? In my opinion, Shake Shack right now is not a buy. It's not a buy. And it kind of hurts me to say it because Shake Shack is such a growth engine right now. They're growing and they're growing. But at the same time, for my type of investor discipline, a 70 PE on a company that same-store sales could start to fall. And if those same-store sales start to fall, this stock will drop dramatically. I can almost guarantee you that almost every single retailer, every single food-related stock, if their same-store sales somehow go negative, that's like death for a stock. So I look at that and it's worrisome to me, which is why when it's at a 70 PE, I just cannot get involved. And then also with these restaurant type stocks, like I talked about in the risk factors, It takes one E. coli situation or one, really bad health report in a restaurant that blows up in the media, and next thing you know, your brand's hurt very much, and that stock price goes. So for those following reasons, Shake Shack, in my opinion, is not quite a buy. If this stock, fell dramatically, maybe fell to around a $28, $29 price range, I would absolutely start buying it at that time. But for me, this one's just not quite a buy yet. It doesn't mean that you can't make money in it. You may be able to make money if that's your type of investor philosophy. Chipotle always had a hugely high PE, and yet their stock went up and up and up. So just because I'm not involved with it doesn't mean you can't make money in it, guys. Thank you so much for watching today. Hit that thumbs up button if you guys like this, and if you haven't subscribed, you may want to. I talk about stock market. We do this series every week. We also talk about business. I'm an entrepreneur. I give tips, and we also give personal finance type tips on this channel every single week. Don't forget to hit that thumbs up button. Don't forget to leave in the comment section what video you would love to see next week as far as which stock you want to see broken down. Thank you for watching, guys, and have a great day.